on, is this a long-term period of weakness and decline or not? I don't believe it's a long-term matter. As a matter of fact, I believe certain fundamentals are already starting to improve. Household debt to disposable income ratio starting to go down. We're looking at CPI inflation declining. We expect interest rate cuts fairly soon. So I anticipate that demand for residential property will gradually start to improve through 2009, starting off very weak and improving thereafter. So it's a year of you've probably got to break up the year into segments. I believe by the end of next year, conditions in the market could be considerably better than what they are now.
John, do you at all in your index look at areas? I mean, are we seeing some areas deteriorating more than others?
Well, there are some areas deteriorating more than others, but no. My index is for on a national basis. As I say, I break it down into sub-segments based on room number, which is a good proxy for size of house. And what we have seen at the moment is freehold 2 bedrooms and less, so small size freehold properties. That's where the biggest price deflation has come. That's been in deflation for quite some time, and a lot of those houses are in sort of lower end areas. And I think what that's indicating to us is that certainly, maybe not in township areas yet, but in your lower end former white suburban areas, there has been significant amounts of financial stress. Those are the people who have been victims of high food price inflation and high transport cost inflation, and that market to me at the moment is very weak.
Moneyweb staff Denise Mschlanger wrote an interesting piece last week about the attractiveness of the suburbs as far as house price increases are concerned, particularly in the townships. And she's saying that, in fact, in Soweto, for instance, we're seeing house price inflation, and we're seeing quite significant growth in Soweto.
Yeah, I've calculated a township index of the major township areas around the major metros from Deeds Office data, and that was still inflating 19.7% year on year, my most in the third quarter. But on a declining inflation trend, I think the townships benefit from the fact that they are the most affordable, and a significant amount of people may be downscaling due to financial pressure, but downscaling out of the suburban markets back into townships. And then I think places like Soweto, with the increase in shopping malls and sort of a normalization away from dormitory towns towards mixed-use towns with their own economy, are starting to increase in popularity.
It's a changing environment, really, that's pushing the price rather than the dynamic that we're seeing in other suburbs.
I call it a normalization of the environment after the political the matters have improved over the past decade and a half. And I think townships are increasing in many instances as places to live. And that brain drain out of the townships, I think it's still there. The upwardly mobile people, a certain portion of them leaving towards the suburbs where the big jobs still are. But I think that may be slowing down, and some return to townships may be taking place, supporting those markets.
For the homeowner, sell or hold market?
Oh, I think at the moment, if you can avoid selling, do so. Obviously, financial stress sometimes pushes one in that way, but not a wonderful time to sell at the moment. But I still believe in this economy in the longer term. I still believe that we are going to achieve high growth rates yet again, that there's a lot of positive structural change, infrastructure upgrades, a lot of things going for us in the longer term. Therefore, I believe in the longer term of this property market too. So, no, I don't think it's a wonderful time to be selling at the moment.
That was my next question. Will we see another 2001 to 2004 era in the property market? Because that was just crazy.
I shouldn't say no, never say never, but I don't believe we should. I think it's back to normal cycles now. That cycle was abnormally good due to a massive drop in interest rates post 1998.
FNB's John Loos with us on the program. Thank you very much.